Upon arriving in Bangalore, Arjun was greeted by the cool, polished marble of the hotel lobby. Nisha, the front desk manager, welcomed him with a professional smile. Arjun handed over his corporate credit card and his company's GST details, ensuring that the business would receive the full benefit of the taxes paid. "Please make sure the GSTIN is mentioned on the final invoice," Arjun reminded her, and Nisha nodded efficiently as she processed his check-in. The trip was a resounding success, but the final morning brought an unexpected surprise. As Arjun stood at the checkout counter, Nisha handed him the printed folio. Arjun scanned the numbers. The room rate was as expected, but the tax breakdown gave him pause. Instead of the Integrated Goods and Services Tax, IGST, he usually saw on interstate purchases, the bill showed Central GST, CGST, and Karnataka State GST, SGST. Arjun sat in the back of a taxi headed for the Bangalore airport, staring at the invoice. His company was registered in Maharashtra. He knew that his accountant could only claim input tax credit, ITC, if the tax paid was IGST, or if the SGST belonged to his home state. By charging Karnataka SGST, the hotel had effectively made that tax a sunk cost. He couldn't claim it back against his liabilities in Mumbai. He felt a surge of frustration. He was losing thousands of rupees in credit. Back in Mumbai, Arjun visited his chief accountant, Ananya. Her office was a fortress of organized ledgers and digital screens. He tossed the Bangalore invoice onto her desk. "Ananya, look at this. The hotel refused to charge IGST. They said they have to charge local tax because the service was performed in Karnataka. Is there any way we can claim this ITC?" Arjun asked, hoping for a loophole. Ananya sighed softly as she looked at the bill. "I'm afraid not, Arjun," she explained. "Under the GST place of supply rules, services related to immovable property, like a hotel stay, are considered provided where the property is located. Since the hotel is in Karnataka, they are legally required to charge local CGST and SGST. Because our company isn't registered in Karnataka, that SGST is blocked for us. It becomes a business expense rather than a credit." Arjun leaned back, crossing his arms. "So every time I travel to Bangalore or any other state, I lose a significant portion of the hotel bill to block taxes? That adds up to a massive amount over a year for the whole team." Ananya nodded. "Strictly speaking, yes. The law treats you as an unregistered consumer in that state. However, there is a way to navigate this tax wall for future trips by changing how we procure the service." Ananya explained the strategy. "We need to stop booking directly with out-of-state hotels. Instead, we can use a specialized travel agency specifically located in Bangalore. When a Bangalore-based agency invoices our Mumbai firm, the transaction becomes interstate. They provide us with a travel management service. Because the agency is in one state and we are in another, the tax they charge is based on their location relative to ours." To put the plan into action, Arjun hopped on a video call with Vihan, a representative from a leading corporate travel agency based in Bangalore. Vihan confirmed the benefit. "When you book through us, we invoice your Mumbai company from our Bangalore office. Because we are providing an intermediary service to a registered business in another state, we charge you IGST. You pay the same total amount, but that IGST is now fully claimable as ITC for your firm in Maharashtra." At the end of the quarter, Arjun and Ananya reviewed the company's tax liability. The blocked credit column was nearly empty. By routing their Bangalore bookings through Vihan's agency, they had converted thousands of rupees of expenses back into valuable tax credits. Arjun shook Ananya's hand, realizing that in business, the best solutions aren't just about working harder, but about understanding the rules of the game to ensure every rupee works for the company.